This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XGX index currently at 44,011. Bitcoin shooting up over 4.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. A lot of bullish headlines out there. Russian lawmakers suggesting Russia could accept Bitcoin for oil payments in response to global sanctions for its invasion of Ukraine. Duma State Energy Committee Chair Pavel Zelvany saying during a news conference today that Russia can sell gas to the West for rubles and gold and to friendly countries such as China or Turkey for either national currency or Bitcoins. Meanwhile, El Salvador President Nayib Bukele busy on Twitter, first denying a Reuters report that Binance CEO Changpeng Zhao was jetting into El Salvador to take control of the country's Bitcoin bond issuance after the sale had been delayed earlier this week. While Bukele confirmed the meeting with CZ, he said their discussion was unrelated. Bukele also expressed displeasure that the U.S. Senate is advancing a bill to mitigate risks to the American financial system from El Salvador's adoption of Bitcoin. And spot Bitcoin exchange-traded funds could get the green light by mid-2023, given a proposed U.S. Securities and Exchange Commission rule change that redefines exchanges. Bloomberg intelligence analysts writing that, quote, expanding the definition of an exchange could eliminate the agency's primary objection to the products by bringing cryptocurrency platforms under the SEC's regulatory framework. Once crypto exchanges are compliant, the SEC's primary reason for denying spot Bitcoin ETFs would no longer be valid, likely clearing the way for approval. The change is expected to be finalized sometime between November of this year and May of 2023.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Rumors of the Luna Foundation Guard following through on its plans to buy $3 billion worth of Bitcoin to introduce a new BTC-backed reserve UST stablecoin continue to do the rounds. Terraform Labs co-founder Do Kwon saying the eventual goal is to buy $10 billion worth in BTC. Here we see on-chain data showing $125 million worth of Tether was moved out of a Gnosis safe address thought to be associated with Luna Wednesday, and another similar transaction was made earlier today to what appears to be a Binance address coinciding with an initial rise in Bitcoin's price. Split Capital's Zahir Ebtekar tweeting, there's probably 3 to 7 billion in bidding coming on the back of Do Kwon's buying of a couple billion. It shouldn't be taken lightly how enormous known spot buys are. And Global Block adding that, quote, tens of thousands of Bitcoin being bought by the Luna Foundation Guard and taken off the market will likely have a significant impact on price over the coming weeks and months. Bitcoin bears will have a hard time fighting the buy pressure and sellers will get exhausted, leading to a move to the upside above 45,000, assuming oil prices do not make new highs. All right, joining me now to discuss BTC price and more is Seth Wunder, Chief Investment Officer at investing app Acorns. Hello there, Seth. So we're seeing a rally in Bitcoin right now, a lot of green on the board. What's going on?
Yeah, I was just listening to the top of your segment. Well, first of all, thanks for having me. I'm glad to be here. And, what's fascinating is that when we were talking about cryptocurrencies and Bitcoin more specifically over the last few years, a lot of it was just about price. And it was a bit more of a field of dreams concepts of what cryptos and Bitcoin would represent. And in the first couple of minutes of your segment, we're talking about like real transactions, whether they be in global trades, from sovereign perspective, commercial perspective. We've seen institutional trading desks transact in Bitcoin this week. And so, we're moving from hopes and dreams and concepts to practical applications. And, that sets up for a significant shift in demand over the long term, which is, certainly how we think about investing.
Certainly. We hear that Russia could potentially start exploring or at least thinking of the idea of trading oil with Bitcoin. BlackRock is also looking to offer crypto services. Pretty bullish.
Yeah, it's funny. The reality is if you look at it over a continuum of, the train leaving the station, we are down the tracks at this point. There will be multiple news stories that happen every week, certainly every day in some cadences, and they all will seem significant in their own right, and they are, and certainly in that moment in time. But if we look at it over multiple quarters and years, these are all just part of the process of normalizing how Bitcoin gets used, how cryptos get used more broadly, and where the adoption curves look. And to me, it looks like they're steepening, and that's sort of a positive backdrop.
Do you have any thoughts on Luna introducing a new BTC-backed reserve UST stablecoin?
No, not really. I mean, I would just put it into the bucket of the last thing I said, which is that, whether it be other aspects of reserve coins, different institutions adopting it, the regulatory framework improving, each of them are important sort of building blocks in the ecosystem, as opposed to highlighting or centering on any one announcement.
All right. Well, taking a look at the price of Bitcoin, it's been trading at a very narrow price range. Are you seeing any trends in volumes, anything of note? And what's your strategy when navigating the volatility of crypto these days?
Yeah. So first off, from our perspective, at Acorns, we have about 4.5 million subscribers or customers. One of the things that they tell us in terms of their knowledge and desire to invest in Bitcoin is to understand the volatility and get comfortable with it, right? So it's top of mind for the masses and particularly for the crypto curious. So it's a topic that we'll talk about today, and we should be talking about for some time to come. The reality is as assets grow and we continue to expand total levels of investments, over time, statistically, volatility will start to come down. So, it's one thing to focus on it today, but to recognize that with continued adoption, we'll get into lower levels of volatility over the long term. But if you look at the price currently, we have been in a risk-off environment across risk assets for the better part of this year. You've certainly seen correlations of bonds and stocks move up together and sell-offs in both. Bitcoin actually has done quite well in the last several months several weeks in that backdrop, more in a consolidation range than pure sell-off. And that usually bodes well for sort of the risk-on environment to come in many ways, where those outperforming assets during risk-off periods will do well as risk-taking starts to improve. So we'll see. But right now with Bitcoin consolidating and starting to see some up move, maybe we're getting to the end of that consolidation phase.
So short term, where do you see Bitcoin in support, resistance? What's that key resistance level that needs a breakout to see higher highs?
Yeah, I don't overly fixate on the shorter term. I mean, the way that we try to educate our customers and to communicate to them and really enable them in the way that they interact with Acorns is about several principles that we really teach, which is long-term investing, dollar cost averaging, being consistent with their investments over both those periods of time, and most importantly, staying diversified. And so if you follow those principles, even a volatile asset like crypto and Bitcoin has a place in those portfolios. And so there will be perturbation short term and technical levels and so forth. My vantage point and our orientation towards our customers is really about what the long-term potential looks like.
All right. You also have some news that Acorn is adding bits of Bitcoin for America's crypto curious. What's that all about?
Yeah, it actually, that's a great question because it jumps off of where I just finished before, which is, the statistical nature of Bitcoin in terms of its size, its volatility, and all that construct really makes sense in a portfolio today. We were able to put the pencil to paper, if you will, on what that math represents and how to think about where Bitcoin fits in a properly diversified portfolio construct. We've been able to enable Bitcoin this week for our customers to opt in and have the choice of having some exposure. And we've also provided the educational framework and so forth to give them comfort that they can understand where Bitcoin's coming from, understand the volatility in portfolio construction, what's the risk and suitability for them as a customer, and then how to think about the long-term nature of it. So we're excited to bring the crypto curious into the Bitcoin community and to really make it an accessible asset for everyday Americans.
All right, some sober long-term strategies for investing in Bitcoin. Seth, thanks for joining us. That was Acorns Chief Investment Officer Seth Wunder. Coming up, the ongoing debate on mining and how it impacts the environment next with Bitcoin miner CleanSpark. Welcome back. Bitcoin mining and ESG, which stands for Environmental, Social, and Governance, are a match made in heaven, according to my next guest, who adds that as clean energy gradually gets cheaper, mining operations will help subsidize green projects. Joining us now is Zach Bradford, CEO of CleanSpark, a NASDAQ-listed U.S. company that uses renewable sources to mine Bitcoin. Hi, Zach. Thanks for joining us. So Bitcoin has a dirty reputation, as you say. It consumes more energy than countries like Ukraine and Norway, according to often cited Cambridge University data. It sounds pretty bad.
Yeah, no, first, thanks for having me. But, as bad as the headlines can make it be, and frankly, mining has gotten a little dirtier after the bans in China. And I think we can accept that and know that you have to look at the positive trends, though. Clean energy doesn't pay for itself. There needs to be customers that can use it. And also one of the risks around, or one of the concerns around renewables for utilities is their intermittency. The sun shines, the wind blows, and where do they put all that power? Well, they can put it with Bitcoin miners. So we really are a match to allow greater renewables, but also our purchasing power. With the amount of power that we use, we can go to utilities and say, hey, we really need this to be renewable to meet the needs that we have. And, we feel that any miner can do it and it's well within reach.
I'm really actually surprised that you say that the ban in China made Bitcoin dirtier, because I've heard the opposite argument laid out, that China miners were using a lot of older equipment, maybe some coal during some seasons. And with the ban, a lot of mining hash rate went to the United States, went to other countries where renewable sources were more popularly used. Is that not the case?
Based on the studies that we've looked at, it doesn't look like that is the case. Now, I should say it was a fractional difference. It's a few percentage points here and there. But that's been one of the headlines that we as miners have had to deal with, is studies that have come out and said mining's gotten dirtier. We really think that what it's done instead is, to your point, there was a lot of unknowns about what power is really being used. So now that it's in environments like the US and other countries, I think that there's a lot more transparency about the actual power being used. So, do we really know what the power mixes were a year ago? Probably not fully. But according to the studies, yes, it did get dirtier. But I think that U.S. miners have a much clearer path to ensuring renewables in the future.
And so what projects are you thinking of that will ensure that renewables are being used in Bitcoin mining more in the future?
I do think it comes down to, decisions that we make as we do site selections. But also, in many jurisdictions, you can make choices. You can choose to purchase solar. And the more demand that a utility or an off-taker has to purchase solar, more solar gets built. We're trying to interact in different areas where actually for every facility built, we're looking for a solar farm to also be built. Now, this is something that we're still exploring at this time, but it's, again, something well within reach that from a regulatory environment in the US, you can structure these virtual PPAs and actually fund a solar farm being built to support a facility. So we're seeing a lot of this happen in West Texas, where there's already renewables that are also underutilized. So we think that the combination in the US is going to become kind of a perfect storm, especially as, many states and really at a federal level too, the U.S. has a goal of decarbonizing our grid to a large degree, and we think that miners can play a big part because we can stabilize the grid. We can be there to, through demand response programs, send that power back to the grid instead of consuming it ourselves. And by doing that, that means we're essentially a spinning reserve. There doesn't need to be a power plant that is making no money, just kind of set off to the side. Instead, it can be cash flowed, it can be maintained, and it can be pushed to the grid in a matter of minutes instead of in hours.
Zach, I have one last question for you. Why does Bitcoin get such a bad rap out of all the industries out there? Gold mining, the US dollar, the production it takes to facilitate its dominance around the world. Why Bitcoin of all the energy consuming things out there?
I think it's such an easy target. And it's unfortunate because, I would bet that if you measure the amount of power that's used by, Facebook or, other social medias and the amount of power being used to host selfies, I would actually expect would exceed the power used for Bitcoin mining. I just think it's because there is transparency. You can do the math. You can say the network hash rate is this, therefore you can extrapolate total power used behind it. I also think that it largely comes to, fear-based. People, governments in particular, they periodically get worried about the effects of crypto and regulation and things like that. And it's an easy stone to throw. But I think that's why, we as miners, who are the infrastructure and the power users behind the blockchain, is if we lean into this and we embrace renewables, I think we can start to, better control the narrative and interact with the governments around us to get the story straight, because it's really not what media makes it to be most of the time.
Mm-hmm. Well, you wrote an article for us, Zach. It's called Bitcoin Mining and ESG, a Match Made in Heaven. If folks want to read more, head over to CoinDesk.com. Thank you, Zach, for joining us.
Hey,
that was
you.
CleanSpark CEO, Zach Bradford. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 o'clock Eastern. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.